What's going on YouTube? So we're going to be going over a strategy that allows you to 2x your money in a month. So we're going to be using the stock TQQQ, which is the ProShares Ultra Pro QQQ. And basically what this is, it's an ETF where you're triple leveraging the NASDAQ. And if you're not familiar with the NASDAQ, it's basically containing all the tech companies. So if we take a look at the holdings, the top holdings are going to be Apple, Microsoft, Amazon, Facebook, Tesla, Google, Nvidia, Adobe, and Broadcom. So it's really solid companies, but it is mainly tech. So it is going to be pretty volatile, especially since it is triple leverage. But since it's triple leverage, that means the option premiums are going to be a lot higher because the stock moves a lot more than the regular triple Q. So let's head over to the options chain, and this strategy is going to require an April 8th expiration date. And what we're going to be doing is first we're going to be doing a buy call, and we're going to be buying the 45.5 and selling the one under it, the $45 strike for the call side. So it's going to look like a call credit spread, but we're not going to be doing a call credit spread. We're going to do a 4-leg option strategy called an iron condor. So we're going to be doing a sell put, and we're going to be selling the 35 strike and then buying the one under it, the 34 strike. So as we can see, we're shorting an iron condor, and our total credit is going to be $43. And as we can see, our collateral is going to be $100. But because we're receiving a minimum credit of $43, our collateral is going to be a lot less. It's going to be 100 minus 43. Our collateral is only going to require $57 of credit per contract, which is pretty good. This is one way to grow a small account with very little capital because you're pretty much doubling your money as long as a trade goes your way. So what needs to happen? If we head over to the options profit calculator here, we can see that we've entered in the exact trade, and we can see our exact profit and loss potential. So we basically need the stock to stay within our strike prices, which we chose was the $45 on the call side and the $35 on the put side. So as long as it stays within that $10 price range, we're going to be making our full profit potential of, as we saw here, $43, which is essentially almost doubling your money. Very, very nice strategy, and doubling your money in 1 month is a very, very high return. So it is going to allow you to grow small accounts pretty fast. Now, if you have a larger account, Iron Condors still could be good, but you won't really be using as much capital. You won't be putting in like thousands of contracts into this because it does have some risks. You could lose your money as well. But there is really good upside potential and a high chance of profit. And the reason why we chose a far out of the money strike price for the put side is because in case the stock continues to dip even more than it has, because the markets are pretty volatile, everyone's pretty scared, and implied volatility is going to be pretty high right now, which is a good time to sell options, whether it be cash gear puts, covered calls, or even 2-leg or 4-leg option strategies such as credit spreads, iron condors, iron butterflies, etc. So those strategies are going to thrive in this type of market. So this strategy is going to be pretty good for people with small accounts. A lot of you have requested small account option strategies, and this one looks pretty good to me. So that's about it. Thanks for watching.